Here we go, another video. It is September 26th, Friday. A lot of different news coming out, stories. Okay, the day trading is about to get a lot easier for beginners. Things could get ugly though. They're getting rid of the day trader pattern rule. It's been around forever. You need over 25,000 to trade in and out every day, 10 times, 100 times, whatever you want to do. So let's look into it. FINRA voted to change its pattern day trading rule, which would allow investors with smaller accounts sizes to trade actively. So let's look down. You see, day trading. All right, let's read the story here. All right, it could get easier for anyone to start day trading, but should they? This week, Financial Industry Regulatory Authority announced that it would vote change its pattern day trading rule. Previously, FINRA required investors to have an account worth at least 25,000 in order to day trade every day. Now, other countries, I don't believe Canada has it. I'm not sure other countries, but this has been around forever. It's basically to save people from losing all their money, which it's like anything in life. Yeah. You got to let people do what they're going to do. It hurts everyone else. He has 5,000, 10,000. You can grow that. You don't have to take that much risk. All right. So, in order to day trade, which involves opening and closing a stock option position the same day, doing this four or more times over a 5-day period would get you marked as a pattern day trader, potentially resulting in your account getting restricted for like 90 days. Now, the restriction may go away, which will allow investors all sizes, account sizes to day trade. I think this is one of the most significant changes FINRA has made in the equity market structure. Decades, Adam Cohen, head of trading operations at TradeStation, told Market Watch. So articles on Market Watch. Cohen said the pattern day trading rules put in effect around the time of dot-com bubble. Way too many. The way to put up some guardrails in response to an explosion in amateur day trading. The rule was not only meant to protect retail investors from trading too actively, but also to protect brokerages how to monitor margin requirements and risk. However, since the technology around executing retail trades has gotten much better in the past decades, brokerage risks have come down quite a bit. Day trading rules essentially became somewhat obsolete as technology evolved. Firms no longer allow clients to overspend available funds, margin requirements they have. But while technology has minimalized the risk of trading, because the brokerage firm's risk remain for the individual trader. Well, I believe these regulations are out of date and need updating. Our markets have become casinos. Yeah, they've been that way for a while now. The only benefit the house payment for order flow brokers and high speed middlemen. David Lara, co founder of Urban Finance Investor Advocacy Group. We, the investors, told MarketWatch. Let's see, market making firms and brokerages that collect payments for order flow benefit will, when retail investors trade more because they make money off each trade, these firms are incentivized to encourage more active trading and are lobbying hard for changes like this. Unfortunately, as usual, there'll be the average investor that's harmed. Yeah, a lot of people go into stuff and just jump right in. You just can't do that. It takes time. That's why, there's day trading chat rooms. You gotta have people teach you stuff. They don't teach trading anywhere in school. Handful of retail traders echo the sentiment. Experienced traders and inexperienced traders could end up losing money because of the rule change. Um, just written down here. Said the pattern day trading rules would protect people from buying or selling, panic, falling victim to their emotions. It's going to have a pretty big impact. Market structure. I can see there's just going to be huge volatility spike in the market. This could lead to more intraday churn on popular stocks, short dated options, more options trading. But even traders who have run into day trading rule in the past have some reservations about 25,000 barrier going away. Aaron Cook, active retail trader from Florida, once he got flagged for 90 days at pattern day trading. He said the experience almost made him stop trading forever. I knew the PDT rule kept me from blowing my account. You recall working to get his trading count above 25,000 mark, but then added pressure meant he would have to trade more conservatively. He would get out of trades and take losses in fear of dipping below the level to day trade. Said he learned to trade with the pattern day trading rule in the back of his mind. Most people under 25,000 are new traders struggle with emotions. This will allow them and to have the fear takeover ability to sell, and otherwise they wouldn't be able to, Cook said, with positive and negative. Cook said the removal of the guardrail could be very, very dangerous for inexperienced traders. Trading has risk, it always has, Kellen said. So I believe there are always going to be accounts that don't understand proper risk management, overtrade. Of course, you always see people online who like they blew up their account. I'm not even sure if they're joking or not. They have no stop loss. Like if you're down one day 300, stop working, you get out. It's just you don't have people want money so bad, like every day, like they want like $1 million just appear in their account. It doesn't work that way. And so you gotta, play by the rules and you will get there. You will make money. Without the pattern day trading rule, retail investors could have a greater individual responsibility to manage risk effectively. But Kona also said that some of the brokerages to supply their clients with proper education, as though brokerages don't want their customers blowing up their accounts and walking away from the market altogether. Now, FINRA has voted to change the pattern day trading rule. It will go to the Securities Exchange Commission for approval, which will happen. Trump's got a new person. I think this is January, so this has easily happened. So we'll see what it is. I thought they said before it's $5,000 a new pattern day trading rule. Maybe it's going to be zero. I don't know. Each firm will be different. E-Trade, TD Ameritrade. I don't know, exactly what it's going to be. I don't think it's said yet, even though they said something before. So this is great, though. It's great. $5,000 account, 10,000. Just say you even trade. Like people don't understand. You could trade Nvidia every day. Just trade that, and just say you make 3 trades a week, even 5, 10, 1,500. You have like 70,000 you're making just by hitting a button in the morning. A small little move. That's all you need. Once you know what you're doing, it's just like repetitions, like a quarterback in the NFL. Once you know the game, understand the game, you can make a great living, and you could even have another job too. So, this is great, and it really helps retail traders. All right, that's it. Please subscribe to Mike Cayman Trades on YouTube. Smash the like button. Your thoughts on this? Any other questions, comments? That's it. Check out all my other social media too. Peace.